What's going on, YouTube family? I got some great news for you guys. The banks are starting to lend again. Now, there's a 20% uptick when it comes to approvals on auto loans, whether that's economy cars, luxury cars, or even exotic cars. All the way across the board, dealerships across the United States are talking about what they're starting to see. Now, is this because the banks see a shiny outcome for 2026? Or is it because the Fed's going to start cutting rates here soon? Or is there something much more sinister behind them willing to lend more money? So if you've been living under a rock, the auto loan crisis basically rocked the automotive industry. Banks were giving out everybody and their grandma crazy auto loans for cars that simply weren't worth it. If your car was worth $50,000, they would give you an $80,000 loan. Didn't care about your DTI, didn't care about your credit score. They were just throwing money out there. Money was flowing, everything was great. The Fed was basically buying up all their banknotes, so it didn't really matter. But what happened? People stopped being able to afford their cars. They started walking away from them, and banks were losing hundreds of millions of dollars every single month due to defaults and deficiencies. Now, one of the biggest things is the deficiency factor, and this is what's going to roll us into why banks are starting to lend today. Now, people know that you're going to lose money when it comes to people defaulting, but deficiencies is what's crushing the bank. Now, let's just say that I gave somebody a $100,000 loan for this G-Wagon, and they paid maybe 6 months, maybe 1 year, and then they decided to walk away. They still owe maybe $90,000 on this car. Well, if I take it to auction today, it's no longer worth that because the market's pretty much been cut in half. So let's say that a dealer like myself buys this for $50,000. That means that the bank is going to lose $40,000 on just this one car. Now, what happens if this car was only given a 3% interest loan? How many cars like this do they have to sell to make up for that $40,000? This is something that I really love to talk to people about because that doesn't really register in their head. They're like, oh, well, banks are fine. They're making money. I mean, don't ever feel sorry for banks, but as far as their lending goes, think about it. They gave so many people, like crap customers, 2, 3, 4, 5, 6% interest rates that didn't deserve them. And what happens when they take 10, 20, 30, 40, $50,000 losses on vehicles? They're absolutely screwed. And so how are they supposed to outdo this? Well, banks typically, when they get a lot of defaults and delinquencies, they tighten up. They stop lending. Okay, we're no longer going to do 84 months. We're no longer going to do 5% interest. Everything's going to be 8 to 10%. We're no longer going to do maybe older cars. We're going to cut down the miles. They're basically going to restrict till only a small amount of vehicles are going out at more guaranteed customers. But here's the problem. You have the G-Wagons of the world that they gave all these stimulus ballers money for, and now the banks are coming out wanting to do smart lending, only cheap, affordable economy cars with high credit score, high credit worthy people. Now, eventually their goal was to outrun their bad debt with buying much more smaller, better auto loans. But guess what happens? This snowball is getting bigger and it's gaining momentum as we go through there because the money's sucked out of the economy. Unemployment's much more worse than what the government's talking about. And so people are basically losing their minds and losing their cars. So as it starts to speed up, it's overtaking the loans that they're issuing now. So how do they do this? A bank only has one choice. You either squeeze your purse strings and tighten up your lending to offset your risk and debt and to hopefully get you better auto loans that'll outrun your better performance, or you got to do the other thing. Start issuing more auto loans so this way you could outrun your bad debt. And I think that's where we're at today. So many banks realize that this bad debt is not going anywhere, and if anything, it's going to pick up. So how do I get rid of these, millions of auto loans that are crap? Well, guess what? I have to lend twice as many. So instead of, having 1 million and maybe 200,000 bad auto loans, or maybe 50,000 bad, we're going to lend another million auto loans and just see what happens. Out of the numbers, somebody's going to pay. And that's what they're banking on right now. It's pretty hilarious. As we start to see the banks every month or every quarter, they give us what's called a bank sheet or a rate sheet. Hey, we're going to do 84 months. We're going to do 6% interest. If they have, let's say, a repo, that's okay as long as it's 6 months old. They're starting to change their lending rules just like they did in 2012 when the market started to pick up after the great fallout. So now we're starting to see banks really start become competitive when it comes to lending. Now, is this a good thing or a bad thing? It's a good thing because there are a lot of people on the sidelines that were getting turned down because they couldn't get the cars they wanted because they didn't qualify or the payments were too high. Now, I don't recommend bringing back 84-month loans and some of the 96-month loans that some of these banks are doing, but unfortunately, it seems like they're coming back, and I don't know if they're here to stay. I do like the fact that they're dropping rates. Hopefully, a lot of people out there will be able to refinance but I know a lot of people are upside down in their cars, so technically they can't. So their only goal is to hopefully get people into new cars and kind of push that market through. Now, the funny thing is the auto approvals are up, but overall car sales are still down. So that just shows you that demand is simply not there. They're just approving more people to get the money back out there to kind of do something to move the numbers around. So this is fairly interesting to see where the market is going over the next few months. I know I'm just some random idiot on YouTube talking about cars, but I'd like to give you my opinion and see where it actually goes from here. Now, I think lending is the right way to do this because they need to stimulate sales because the overall car market is in really bad shape. I've never seen so many franchise dealers sell their licenses, independent stores close up, and more importantly, like even some of the cars we have for sale on Facebook Marketplace, they're not moving. There is no liquidity in the market. And I know a lot of people are waiting for the Fed to cut rates, but at the end of the day, the Fed could cut a little bit of rates, but majority of the money that's out there comes from private institutions. So even if they drop it a percentage point, you're not going to feel anything. It's going to be so minute, it doesn't even matter. Until the actual private individuals see that there's a shiny outcome in 2026, which is starting to look that way, I think people are going to start getting more aggressive with lending. And once the liquidity is out in the market, you're going to see a lot of things change when it comes to auto loans, when it comes to mortgages, when it comes to people doing business loans, all that other stuff. But everything is usually tied to car loans because a lot of your state, local banks and credit unions, that's where they make majority of their money. They try to do auto loans at 5, 10, 15% interest. And then this offsets them doing a 30-year mortgage because remember, all that money is the credit union or the state bank's money. They don't have that much. So the only profit sharing they can get is off of the interest of the loans. Now, if they don't have enough auto loans to go out there or they stop lending altogether, guess what happens next? No more credit cards, no more small business loans, and it's all tied together. So, like I said, you could take this as a good thing or a bad thing that banks are starting to lend. My advice, now that they're starting to lend, please do not get yourself into trouble. Be very decisive. It is definitely a buyer's market. Take your time, do some shopping. Every week I'm looking on Facebook, I'm looking on the auctions, and I see deals everywhere I look. Now, I just started up my licensing again. We're going through all the paperwork, so hopefully we can start selling cars online. And I'm seeing a lot of really nice cars go for cheap, especially like newer Hyundais, newer Sentras, newer Honda Civics, stuff like that. The market's just not there. So hopefully, as we start to get some of these affordable cars, we can start putting them online for you guys to see them. Pretty soon, I'm going to also have a few luxury cars and some exotic cars, which I'll show you guys here in a little bit. We got some really great stuff coming out. I'm getting ready for SEMA. We're building the studio. This week will probably be my last week I'll be filming in this studio. I'm going to be doing more stuff actually in my shop and walking around because now that the economy is starting to feel better and I'm a little more optimistic about how things are going, I'm going to start putting money down and buying more cars and get into flipping. If you guys are not new to my channel, you saw that we were buying tons of cars every single month and running them through the auction and selling them to people online because it was such a great thing and there was tons of money out there. But the last few months, it was really ugly. Like actually, I'd say probably the last year and a half, it's just been really ugly. So I'd like to get back into that. And I think I want to bring you guys along for the ride. Our car flipping series is going to start kicking off. I think you guys are going to love it. So make sure you stay tuned for that. But if you have any questions or comments, please put in the comment section below. I try to answer every single one. Also follow me on Instagram at Lucky Lopez, and we'll see you next video.